The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. Monday morning. Let's get started. Let's look at the 10-year. Well, we know we had that jobs report, and we know that the bond and the note market didn't take that very well. And as cooked as the books may be, however you want to look at it, we're looking at now flip-flopping around the Fed possibility of doing a token just to satisfy all parties, doing a token, maybe a little 25 basis point blip up somewhere on the yield curve. And this 129.13 that we had talked about, keep turning the rents the same way. Buy support. That was obviously a stop out. That's what stops are for. And we generally try to talk about things that don't work out as well as do work out on this show. And this is one of those, lose a little, make a lot trades. And we're losing a little right here. We're trading 128, 24, 25 right now, pre-market. This is, again, the 10-year. And what do we do now? Let's just kind of back up just a little bit here. Major long-term support. We've got a new profile that's appearing this week. That's one of the reasons I'm kind of, starting with this scene. Major support. 127.23, 24, 127.27. So that little DMZ down there between previous unfair highs on the weekly, current unfair lows on the weekly, is going to have to really hold. So, it's easy to say, hey, it's going to have to hold. So what do we do now? So right now, I think you've got to just sit on the sidelines. Took a little bit of a hitch on Friday with that pullback from the long side. And right now, you don't have any leverage down here. I don't see any reasons to pick any battles in between here. And we're talking, guys who are in the long-term investor phase of their career, you guys are more than likely to still stay long, all right? But traders, intermediate time frame guys who are out there, right now it's time to just sit tight. You took your medicine on Friday, and now we're waiting patiently until a better battle point down here. And with the information that's come out, to be honest with you, on the U.S. government figures, in normal situations, God, 10, 15 years ago, we'd be selling off. Right now we're just, this is a blip off of all-time highs, and you've got to kind of step back and kind of take a look at that and just let that sink in. We are literally, I think we're still, below 2% on the 10-year. What does that tell you? That tells you that there's a couple of things that tells you. It tells you that not a lot of folks believe the economic figures. There's a race to zero on the global interest rate scene, and the Fed's not going to back off the gas pedal too much. So, I think the leverage for the long-term investor for notes and bonds is still on the long side. Intermediate traders, again, could possibly wait until better battle points down here around 127, 24, 27. All right, so that's the scene on the 10-year. If anybody has any questions about that, that's just the way we're looking at it. Here's the 240s, and we had the breakdown, the daily and the 240. So we're taking a look at that and looking at it for what it's worth. So we're going to take a look at the 30-year really quick. Some guys have been asking me some questions about this because we kind of had a change in tone here. And looking at the daily situation on the 30-year, a very similar situation. Breakdowns 149.04. This is our 30-year daily chart. And what's the next battle point? Next battle point's 144.08 down there, well down there. And again, that's for long-term investors. And then for traders, you're kind of in no man's land down here, in my opinion, on the 30-year also. And again, anybody wants to call in about that, we can chat about it. We're also going to take a look at the euro because this is all interrelated. And again, just going over some usual suspects this morning. Still 114.47. We talked about that getting back down below that and selling it on Friday, in fact, as well as buying the dollar. I'm going to pull this up really quick at that 93.67 area, and I'm going to show you this. Again, this is what, the 10-year didn't work out, and the dollar and the euro worked out. So again, chopping yourself off on some of the trades that you've got stops oriented around the inflection points and hanging on to the ones. And I actually don't see a lot of reasons to get out of this trade from the long side. We've talked about buying support on the dollar, buying support on the 10-year. And the cool thing is about that relationship, if the 10-year and the 30-year happen to sell off, that means rates are going up normally, and that means the dollar actually is going to get stronger by default. So one of those two, stopping yourself out, letting the other one ride, whichever one happens first, is kind of a nice little scene as far as a relative strength trading opportunity. Here's the 240s on the dollar. So, what do you do with the dollar now? I think the dollar, you just put some trailing stops in, and those trailing stops, in my opinion, could be below 94.55 right now on the dollar. And pre-market, we're trading about 95, so on the dollar. We're going to take a look at one more thing. We talked about this Japanese yen. We talked about buying off the 116.67. We haven't reached our target up top yet, 119.55. What do you do now? We pulled back off of, let's see, highs Friday were, God, I can't see that. Hold on. Highs Friday were 119.22, and now we're trading, about 70 ticks down below there, 60 ticks down below there. So what do you do now? I think we're still in the fair auction. I'm trying to look at this as a long-term opportunity, as we have since 101.33. That was 2,000 ticks ago. So right now, just again, looking for support. This is a situation that may bounce around here in the middle of the fair auction. The dollar may move higher, and that could drag this up to that 119.55 area. But right now, short-term traders on the yen, you got something around 118. And again, I'm trading this kind of light myself and just trying to let it breathe on a long-term basis. Didn't reach my target, but still kind of hanging in there a little bit on this one. We got to take a look at the S&Ps. We got about 2 minutes before the first break. And breadth is still super positive on all time frames. We closed above, had a couple of opportunities off 2052, then gave it up. And right now, I'm not a big fan of shorting this. I think we're more than likely going to compress around here, around that 2052. This is the way I'm looking at it, and not looking at this from the short side right now. We've got some support at 2027. That's a big number down there, but that number's going to dissipate over time, because remember, that was something we were benchmarking from back in early January. And as time marches forward, those inflection points kind of disappear a little bit. And I understand that that's a little bit of a esoteric way to look at some of this information. But again, if you guys have questions, please email them in. We'll be more than happy to go through some of these things with you, and why that's the case of what I just stated. So 2052 is going to have to be the breakout again. Right now, I think it's just a sit tight situation on the intermediate, because we kind of failed staying above 2052. Here's the situation on the 240s. You've got support around 2039, 2040, as you can see. Short-term traders, in my opinion, because of the breadth situation. And I did a lot of work on back testing this weekend again. Here's the breadth on the S&Ps. Again, as you can see, the 60s and the 240s may be rolling over, but the long-term situation here. And again, if you guys have the scanner, want to get a trial of it, you got some great information in the admin version that we're making available to you right now. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Talked about the S&Ps for a little bit, and, the bias, in my opinion, is still on the long side for this. That 2052 obviously didn't hold, but we had been up, and let me just pull that back up. Not that you guys don't know this, but in about 5 trading days, we were up about 5% on this thing, and we gapped up or close, opened up. I wouldn't say gap. gapped up, but opened up on Friday. And in normal situations, there's some statistical inferences really that that are they've been historically good trades. We're up 3 days in a row and we gap up. Those are usually situations that you've been able to kind of trade the gap and hang in there for the day, and then usually we'd close down. I mean, not usually, but I know better than 50% chance we close down. I was kind of looking at that, and we referred to that Friday as kind of watch out, because we may have some trading opportunities around 2052, but coming up a long ways and then kind of opening up and the excitement and the glee, if you will, being there and going up to 2068 and then kind of coming back down. But these are normal gyrations of marketplaces. Things don't go in a straight line up, but that was just overextended from a mathematical standpoint, in my opinion. But anything can happen. That's what stops are for, and didn't put a lot of oomph behind getting long in a big way above these inflection points on Friday, as we talked about it. But again, the long-term trend is still up, in my opinion, even though we've kind of been compressing into a point here, as you can see, and we may just kind of float around down here for a little bit. But again, I'm not I don't think there's not a lot of technical reasons, put it this way, that in my opinion, that the market's just going to come down to its knees real quick. Here's the situation on the DAX. We've had a nice little pullback this morning. With the euro starting to come off again, and I don't see why it wouldn't continue to come off. The lows on this particular profile are at around 105.96. And we've reached a low this morning of 106.17. So what is that, 20 points on the DAX? Is that what it is? So math. Yeah. About 20 points we've come down into that and popped off of. What do you do with the DAX? I think the DAX still, again, until we've had some technical damage on this, we still got to be buying support on the DAX. And, again, right now, if you got to give yourself a little noise factor to get into some of those trades. But this is, again, indicative of a possibility of a euro continue to sell off. The DAX, may by default just elevate, repricing itself. So you got to pay attention to that. On the NASDAQ, here's the big support area, in my opinion, and we've come back and kind of bounced around there. But this is something, 42.10. This has been a big number from the past too, 42.08. So this is going to be kind of a Maginot line offense, if you will, for the NASDAQ. Again, I think the leverage is towards the long side on all these still. And there's not a lot of fear that the Fed's going to come in and start raping and pillaging on the raising rate scene. So that's obviously very good news for stocks in general. We got to take a look at gold. I was a big fan of trying to go long this and play around with it at 2067. Again, that's what stops are for. And we talked about, 1267, 1234, the next leg down. Friday, we kind of blew through that a little bit, and I got to give yourself a little bit of noise there, and we're trading 1239. So again, that's kind of where I'm orienting stops on the long side around gold. And again, the target up top now will be 2667. So that's kind of the range gold may float around in. All right, silver, we're going to just mention that briefly. Got about 30 seconds. Not a lot of new things going on with silver. Reached targets up top, 1273 or 1773, and don't see a lot of reasons to play around with silver down here. So that's kind of a no trade, in my opinion. Gold's a little bit more riper opportunity. And we're going to take a look at crude oil. We've got about 10 seconds here. And we're going to get a little bit deeper into crude oil when we get back. 5104 was that number on the bottom, and tightening supplies, so to speak, from OPEC. We'll get into that when we get back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show, and I apologize to Daryl from Brownsville, Texas. I did not see the message here that you're on the line. Daryl, are you still there?
I'm still here, sir. Thank you.
Oh, well, that's man, I tell you what, we would have grabbed you earlier, but I was too much of an idiot to look over to my chats from TFNN that you were on hold here, so I apologize. Thanks for staying in there.
You had some good information that I picked off anyway, so it's appreciated.
Great. Okay. Well, actually, what can we talk about here?
Yeah, this is my deal. I'm a day trader. I try to learn every type of aspect to use to trade the E-mini S&P. So I've watched the slash ZB, and I watched the U.S. dollar, Japan, yen, and there's moves in those two items I just mentioned, and they give me a kind of tip-off of short or go long scalp trade on the ES. Do you have anything preferred you use yourself?
To day trade the ES?
Yes, sir.
If you want my just personal opinion on trading the ES or any of these other things that kind of herky jerk around here, I'll give it to you. It may not be what you want to hear.
No problem.
Okay. Maybe it's my age at this stage of my life, or maybe it's just the kind of evolvement of, the way these computer generated programs have kind of come about. But, and coupled with, there's actually brokerage firms out there now these days that are, and I thought about this about 15 years ago, and I didn't understand why somebody wouldn't have done this, but there's firms out there now that are offering zero commissions and just are happy with the fact that they can make the debit credit spread, which means that, your money's there. They're giving you margin rates at whatever, let's just call it 3 or 4%, and they're giving you credit rates at 0.25%. And most guys out there are trading margin. So there's a lot of things that have changed over time, and this brokerage business, there's I think 75% of the brokerage firms that were out there relative to 10 years ago have actually kind of closed up shop. So the day trading business, the commissions have come down. That's great for day traders. In fact, you can trade for pretty much zero commissions right now almost. That's been a race to zero, just like the currency and the global treasury rates have been. But to answer your question, because these computers have got involved, I've kind of stayed away from really scalping hardcore intraday day trading techniques. And I've kind of stepped back and really tried to focus on just in my plans of when we've gotten into major inflection points. And I've actually traded a lot lighter because, these moves, you never know when the volatility is going to kick in. But obviously it's here. I think we're going to more than likely continue to have some volatility. That's easy to say at this stage after we've kind of gotten the VIX above 20. But, what do I key off of? I really wait for multi-time frame confluence on some of these things that I talk about. And the 240s, I mean, like people use our information, they trade 5-minute time frames. And that's great, for guys who are trading momentum. But I like to wait, like as I'm showing the 240-minute screen right now, we've got 239, 240 sitting there. I think the leverage is towards the long side still on the markets. And again, that's what stops are for if I'm wrong. But I don't really look too far down into things other than 240-minute indicator usages, if you will. And when I look at our scanner, and I've got that up right now, I try to get, I try to figure out, what's the long-term tone of the marketplace, or as Basil kind of threw back to me one day, that, the tide of the market, the tide of this particular instrument. And the tide of this particular instrument has been towards the long side. And I have, there's opportunities to go short the S&Ps. We've gone from 2060, 2070, obviously down into 1800 the other day. And that's been great opportunities, but there's been very short time frame instances where, we've actually showed breakdowns and retests of inflection points that we've broken down from on the short side. Therefore, and again, I mean, eventually, if you day trade long enough, you kind of fall in love with shorting things. And am I saying that correct for you? Or are you?
I can relate, but I watch. If I see the Bollinger Band, the ES Mini way under or way over the Bollinger Band,
right,
and the U.S. yen giving me the signal that it's good to go long or short. I look for those signals, and again, I'm just scalping for quick pick. I'm not looking for much time other than I'll hope that it keeps going in my favor, and then I'll move my stop whichever direction I need to move it. If I'd be so lucky.
Well, again, if everybody traded the same way, then this market would not be tradable. So I commend you on, trying to find a method or some kind of, plan or system, if you will. Here's a 60-minute time frame, and as you can see, we've got a little system we call Vega, which basically paints the bars green or red, and that basically means that we're trading above profiles and continue to trade above profiles or trading below profiles. And as you can see, we still haven't had a lot of reds here relative to greens over time. I'm just looking back in time at our 60-minute time frame. Now, if I go into, I'm just going to pull up a 5-minute time frame on eSignal here. Wait for this to populate here, if it will. Oh God, okay. I'm trying to have it go back 300 days. I'm seeing. Let me see if I can change that really quick here.
While you're doing that, I'm happy for all the folks in the world that have investments in the markets that we go up and we go up. I don't want to see people get hurt like they did in 2008. That was a terrible time for many people. Yeah, you're right.
So, that was, everybody from kids to grandmothers had a tough one back then.
Yeah, people got their investments for their children's inheritance. Even if it's 20 years from now, it's still a little bit of in the mind that it hurts.
Yeah. Well, I tell you what, I'm trying to let a 5-minute time frame. Well, here we go. So this is Vega painted on a 5-minute time frame, and this is what I would consider ultra short. So what this does basically, in a nutshell, is it paints bars above 5-minute profiles, below 5-minute profiles. I don't personally recommend trading on this small a time frame with indicators, but again, that's my kind of way I'm looking at these things. But as you can see, it just paints a situation. You're out of the market most of the time inside of these profiles, and as you can see, we're green above and red below, green above, red below, red below, green above, red below. So this is one short-term way of looking at some of the smaller time frames as far as trading goes. But what I do personally, and I'm going to switch this back to 60 minutes so I can get congruent on all my time frames here. What I do is I try to look at what's the long-term slant. And the ultra long-term slant has literally been long since October 17th. Even though we haven't really moved away from some balance points on a long-term scale since October 17th, since that long-term slant has been hit. And let me go back to my normal time frame here.
You know what I'm looking at, Dick? I'm looking at, John, the E-mini maybe go down to 2036, 2034 area today, and then hold a bounce, hold a support.
Right. Well, here's the October 17th area. That's the one we kind of started turning positive on the breath again, and that was back around 1875, somewhere in there. And obviously, we're trading.
Got crushed down to there.
Yeah. Well, we had our breadth turn negative around September. I think it was September 15th. So when we turned negative on the weeklies and the dailies, obviously around September 15th, September 17th, and there, we caught about a 200-point move based on that breadth, and those are the internals changing. Now, I'm talking about kind of ultra long-term slants here, but as we get, a direction, if you will, from the long side or short side, I tend to day trade if that's ever going to happen, trying to trade from the leverage side of the marketplace, which has been the long side since then. Now, we've had intermediate trading opportunities that we've talked about, namely around December 9th, December 10th, when our daily breadth turned negative. There was some trading opportunities there. But to answer your question, and just to sum it up, I look at the long-term view and I try to trade the short-term view basically blocking out one side of the marketplace, most of the time being the short side blocking it out and trying to trade some of these instruments from the long side on a intraday basis. And again, you're the shorter time frames you trade on, this is almost like a scientific provable fact. Most people that trade on ultra short-term time frames lose money. Now there are some superstars out there, and we have proprietary traders ourselves that sit in a seat, are under some super strict parameters that they can only do this and only do that, and it's a almost a machine-like attitude to where they're kind of in a box that they can't really, let's just say that there's $1,000 in their account for that day. They can only risk 200 for any particular day. The machine actually will shut down on them. I mean, we've actually got some software that actually closes out their position, shuts down the software, and they got to go home and come back the next day. So, people get carried away to day trading. This is like a 3-day talk we could have on that. But, to sum it up, that's basically how I do it, which is look at the long-term view and try to trade the short term based on, what the odds are in my favor on the long term. So if that makes any sense.
Do you have any inflection point for today's trading, any between 2035 to 2045 or something today? What are you looking at? I'm looking at your chart right now.
The shorter term, in my opinion, is around 2039, 2040. That's where we're at right now. And then we've got an inflection point up top, and you got to put stops oriented below there for day traders. Targets up top are 2052 and even higher. So again, we've pulled back a little bit from these recent highs, obviously on Friday, and that's actually been a 30-point pullback to this stage. But and again, we've been compressing into these intermediate inflection points and kind of staying between those. But again, I'm looking at this still from the long side for the most part because of this situation I'm pulling up right now. These dials, as Tom was saying on Wednesday, that they've been flip-flopping around and going crazy lately, and they have. But those are the inflection points for today: 2039, 2040, 2052, and stops below 2039. So.
Okay, thank you.
Okay, thanks very much. I think we've got another caller, Don from Odessa.
Hey, John, it's Don from Odessa.
Hey, Don, how are you?
Fellow chicken lover.
Hey, I love it. I love it.
I heard you say something a while ago, and I'm not familiar with it or how to determine it. You said trading on the margin side of the trade.
Oh, okay. Yeah, I don't know if I even said that right, but what I meant was, when you trade stocks on margin, or futures or anything, I mean, they lend you money. So like, if you're, and that's
I know what margin is. I just don't know how to determine what side of the trade the margin's on. Maybe I said that wrong again, but I don't have an indicator that determines how many people are trading on the long side or the short side based on margin. I was just saying that a lot of brokers, there's a brokerage firm actually that advertised on CNBC last week. They actually did a little bit of special on it where they had basically settled to the point where they were charging 0 commissions. And I thought about that 15 years ago. I was like, oh my God, this is because I was in the brokerage business back then. And not from a brokerage standpoint. I was running a service bureau and we had software and I understood completely every mechanism. I actually worked at Penson down in Dallas, Texas when I was down. Well, I didn't work at the physical place, but we worked with them very closely developing some software for them. But, they made most of their money, not on the ticket charges, but they made most of their money on the spreads. If you want to hang out, we'll talk about that a little further if you'd like. Okay, go ahead.
Okay, cool. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, welcome back to the show. Don, are you still with us?
I am, John. Thank you.
Great. Yeah, if you don't mind, I'll just ramble like for the last 4 minutes here on the
you
topic.
Pretty much answered the question that I called about. Do you have time for more questions?
Sure. Yeah.
I still have my February 30 calls on INTC. Do you see a change in the profile for that this morning?
When do those expire?
10 days from now, I think.
10 days. Yeah.
I'm not sure. It's sometime in the next couple of weeks.
Again, yeah. You gotta. let's see, less than 2 weeks probably. Okay, so 3305 is major support on that particular product. I think we're going to probably not have a big market just completely sell off at this stage. 3297 trading pre-market, so we're right there at a major inflection point on Intel 3305. The good news is you got 2 weeks left, basically, and you could just kind of. I know you probably don't. From what I remember, you don't have a lot in that particular trade. I think you.
No, it's just five calls.
Yeah, I mean, if we get if I hate even saying that word, but if we get a close below 3305, that's going to be very, very good for you, because then we may use that as resistance to drift a little bit lower. But you got to get down into this 30 area to really get in the money, and the time is really going to start eroding those things, as you probably already know, between now and then, and that's a pretty big move for Intel. And I don't know if, all things considered, market relevance and everything factored in, I don't know if that's a super high probability situation at this stage. So
okay, I was just interested to see where if we had gone below resistance and a new profile had emerged or not. So
yeah, you got all those numbers on the scanner. If you want to get
even looking at the screen right now. Okay.
Well, yeah, that's kind of my take on Intel, and I appreciate your call.
Okay, John, thank you very much.
Yeah, you're welcome. So guys, what I was saying about the margin situation, when I was in Dallas, Phil Pendergraft runs Penson. I know Tom probably knows him. I know him personally. Southwest Securities is down there. And that's another clearing firm. Penson's obviously out of business now. They had some major problems in Canada pop up, and they couldn't get out of lawsuits, and some guys who went belly up there that cost them a ton of money. But that was one thing that Phil never, in any negotiations with him, he never, ever allowed you to touch that spread. Because they had the opportunity and the availability to widen the spread out. And as a brokerage firm who cleared through those guys, he'd let you do anything. Like, oh God, you can have cheaper tickets, you can combine trades, you can, do, different, 100 on one side, 100 on the other instruments all day long for one particular clearing rate. But he'd never, ever negotiate on that debit credit spread. It was almost like Al Gore's lockbox. It was something that they made most of their money on. And any clearing firm will be lying to you if they tell you that, oh, they make money off transactions. They make most of their money off of the debit credit spread to people who have brokerage accounts with them. And that's the same for Interactive Brokers. Obviously, it's the same for the firm that I just mentioned that charges 0 commissions. They're willing to forego the whole thing, do a marketing play on the transactions, and just literally be happy with the debit credit spread. And then, therefore, they're acting as a bank, which is basically how they've acted for the entirety of their existence. The transactions are gravy. Guys, you've been great. Stay tuned for Steve Rhodes. He's awesome, and he'll be right up. Thanks very much.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.